Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing great. Welcome. All right, so we're going to go ahead and kick off our show with a quick look at the economic calendar. I had some questions yesterday from folks who were asking about um, what calendars I use. And so I believe the one that was asked was which one do I use for earnings? So this is for the everyday scan. What's going on. We know we have the unemployment claims number that's already come out. We have Chicago PMI coming out at 9:45, 10:30 natty gas inventories. But when I want to track what's happening on the earnings side of things, I head on over to a site called Estimize. It's ESTIMIZE. And that is how I track earnings. And what this allows you to do, and there's a free version of this too. What this site allows you to do is track the stocks that you're interested in having a heads up, whisper numbers, the history of the earnings. It's a neat site. Once you log it, it's pretty darn self-explanatory. So that's usually during earnings season. When my stocks are coming up, they're within that 4 to 6 week window. I'll start making Estimize a part of either the night before's routine or that morning's routine. All right. So let's get to the questions. All right. Call on. Good morning. Can I give my thoughts on this on CFLT? You like the growth story, this 2021 IPO. Thanks for the show. Oh, my pleasure. Thanks for being here. So, in terms of structure, regardless of whether it's a growth story, regardless of whether it's an IPO, regardless of, whatever the surrounding information is, structure over everything. When you have a stock like this with a fairly recent born on date, you always want to know where it is in relation to its VWAP. So normally what I'll do is I will anchor a VWAP to the day that it started trading. To remain north of that level would be a really good sign that there's still long interest, buying interest in the name. That's one level, a VWAP anchored on the IPO date. And then, of course, if it's an IPO, not a DPO, I think we're probably past all the quiet and holding period, but always know when those dates are, the quiet period and the holding period. And then after that, it's just a matter of what's the structure. And, when I look at this, take a look here, support, let's paint that green, and more support right around here. And so what I'm doing is I'm letting the automation of the Darvis 2.0, which is based, rooted, inspired by Darvis, but it's no longer really the traditional Darvis of Nicholas Darvis's era. So I'm letting the previous Darvis sort of indicate to me where those turning points of the market were, and then I'll project that forward. And then if we can get some different volume levels lining up with that, etc. But I would treat this as an oversold buy opportunity, which means we're in the middle of chop. We're in the middle of the desert, right? There's really very little clarity unless you want to take some Fibonacci levels and try to give it a little bit more structure. Take a look at the last major move. This is not complicated at all. And just kind of look at where we are within the context of the last major move. You can take a look at the 786 and 886 and, just kind of see where we are. Maybe put some more lines in the road since we are in chop. But this is chop, and your edge, quite literally, your advantage is at the edge. That's always something that I've, made a part of the way that I trade distribution chop. And your edge, quite literally, your edge is at the edge. So thanks for the question. Does Roblox look like a short here? A short? Well, let's go back to structure before everything else. I think we have a really choppy market in Roblox. And so, hang on, let me get my drawing tools here. All right. So I think we have a pretty choppy market. I'm not going to say that arbitrarily. It's always going to be some kind of visual process. That's chop. And then as we head down to the lower part of the range, see, this is all the range, right? That's your range. And this is your lower part of the range. This is your upper part of the range. This is your edge, right? That's your lower edge. This is your upper edge. So the closer we get down to, look at that, 1, 2, almost 3 times we've bottomed out in this area. That's oversold to me. So the closer we get to that, I'm actually looking for something to send us back higher. So the simple answer is no, because, well, for 2 reasons. One, we're at the lower edge. Think slow stochastic. Think ready, aim, fire. Are we setting up for an oversold bounce? 2, the chop was preceded by an uptrend, which means I still have bullish bias that will rule the direction that I'd prefer to be trading in. So in a simple word, no, but in a little bit more, diving a little bit deeper, you've got another bounce potentially coming in this area. So I'd keep an eye on that. And really any long or short, especially long, before that level is just different levels of being more aggressive. What are my thoughts on Google hire before the end of the year? Tracy, I put out, and I'm not one to say the bottom's in or the top's in or anything like that. I don't know. In fact, I don't know anybody who knows, right? But in the context of trend, that's just delusional. That's when our ego runs amok and a certain degree of revenge trading. But to your question about Google's in chop. Google's in chop. So I'm going to look for it to remain, for the most part, in distribution, since that's what it's been in since specifically November, end of November, 26th. Yeah, 26th. So do I think it goes to 3,000? If it's going to move to the upper end of its range, that's a good spot to look, right? I mean, it's a major psychological level, 3 zeros. It's a major psychological level, and it's where we've gotten to before. I'd also pay attention though to maybe making a pit stop around 82. I know that may not seem like a big deal, those 18 points, especially in the scope of a $3,000 stock, but that's a minor psychological level. So somewhere between 2980 to, and I wouldn't even stop specifically at 3,000. So about 2980 to 3020 is that 40-point range where likely this becomes a little bit more overbought. And then we start to exhaust. And the other day I said, look, if you look at the structure, the choppy structure of the indices and a lot of the sectors and a lot of the stocks, if you're looking at index sector stock, that top down view, you know that we're in chop in a lot of situations, which is very much seasonally what December is like. And then the last week of December, we expect some sort of Santa rally. I think we got the bulk of what the move is. The move is not 5 days of Santa. The move is, can Santa get us to the top of the December chop? And because we're there, I have very, very low expectation for more. Although, clearly we could still get to the top of the chop, but I have low expectations for anything north of that. The wild card here is the expiry. The wild card is that December 31 expiry. So, clearly the end of the year, the end of the month, the end of the week is not going to be a boring one, but I'm not looking for the market. Look, I'm not looking for anybody at the end of this year to stick their neck out and buy at higher highs. To me, that's just bonkers. So let's get to the highs, but let's not anticipate higher highs. So I hope that helps. And so 2980 to 3020. Hey there, Kathy. How do I get pre-market data? Do you have access to it on TOS and TV? So yeah, you'll see that I have the pre-market. I think this is, it's my TradeStation feed. And how do you get it? Well, if you're on Toss, just make sure that you've asked Toss to pull the data, because remember, we can ask Toss to only give us sort of the real trading hours, regular trading hours, or we could ask it to give us pre and post. So make sure you do that on Toss. And then on TradingView, it's if you click on the gear, I'm going to pull TradingView up because that's where I am. So if you click on this little gear icon, you get this particular dialog. And see how it says high and low price labels, pre and post market price labels. So I'm asking for that data. So just make sure that you're asking your platform to show it to you. So that should do it, I believe. All right. GLBE. I'm looking for a run into about 75. I'm trying to figure out the good bullish butterfly. Oh, I'm the wrong person to ask for any of that. I don't trade butterflies, and this is not compressed enough for me to be a momentum setup. Yeah, so this is where I'm not going to be really helpful because, again, look, I totally get it. You're stepping into my analysis. I'm stepping into yours. But if someone were just to say, what do I think of this? It's moving higher. So why not just stick with what's happening? Suppose I am going to be zero help here. I'll tell you straight up. One thing I will tell you, though, that I do recommend in CHOP is cut the range in half. So here's your current range. There's the top of your range. There's the bottom of your range, and cut it in half. There's oftentimes quite a bit of gravitational pull associated with the middle of the range. This is CHOP. So this means down in here, this is oversold, and equally up in this area, that is overbought. And once you have the edge defined, then you can at least put a target in the midway point, which I think is really important and oftentimes overlooked. But I'm not going to be a lot of help on that one. But I did want to at least address the fact that this is CHOP and you're smack dab in the middle of it. So just be careful. I think at this point, support at the 50 would be helpful for a continuation. So cut the range in half, look at where that 50% is. Support off that level could be indicative of a little bit more movement higher. Okay. As far as 75 goes, again, take each obstacle as it comes. Your first obstacle is going to come in around $68, right? And then your next, so that possibly could be a target at some point, but I'm going to look at where we stopped before. There's your Darvis, and then there's a high at 69.83. Let's stop maybe shy of 70 as far as something fairly opportunistic, but keep an eye where we've stopped before. Microsoft. What about Microsoft? Again, choppy market. Let's structure, dictate strategy. Right in here, chop. Now the chop was preceded by an uptrend, which is, all this green in here. So anytime we have a chop and an uptrend, look, right back to previous lows. This is not a trending market. Right back to where we topped out before. Volume ledge right there. That right there is a volume ledge. So do I see much more upside? Well, we could get to this area here, but this is chop, gang. This is chop with a bullish bias. So this is the oversold buy. If you ever find yourself in a non-trending market, first of all, have a process to recognize that you're in a non-trending market. Second, and look, I'll teach you and I'll show you again and again and again how to recognize that. And everything I do comes down to Charles Dow. Almost everything, every indicator that I've created based on volume, like the V-score, inspiration from Charles Dow. The 6 tenets of Dow. One of the 6 is all about volume. Volatility, that still comes from Dow. So many of the things that I've created in my life, whether that be the hourly price movement ranges, the HPMR, those volatility, the zones that I talk about, whether it be the V score. These are rooted in things that someone who traded the markets well over a century ago observed are just these repeating phenomena. If there's anything that is going to benefit, and I don't say this often, that something can benefit everybody and that they have to really internalize this, that is understanding market trends. Dow talked about it. I think Wyckoff took the baton from Dow, kept going with it. Darvis talked about it. Dow just happened to have been first, late 1800s, 1900s, and really understanding that the market behavior creates certain trend patterns. It's the underlying behavior. If there's anything you're ever going to get from me, it's the underlying behavior of the market that dictates the indicators you use and the strategy. If you make that one change, it will absolutely create a sea change in your trading. There's not many things I can say with that kind of confidence. That might be really the only one. Understand the market environment, because we might have favorite indicators. We might have a favorite setup, but the market doesn't give a rip what our favorite is. And there is no individual indicator or setup that works in all environments. And that's sort of this thing that a lot of traders are still sadly stuck in. So addressing that simply is, I have a lot of indicators, I have a lot of setups. It's, the best analogy is the golf clubs in your bag. You're not going to find anybody, although you probably could, just walk around the course with a 7-iron in their hand. That might be the best one to use. But there's a reason we have a lot of clubs in the bag, because we have different shots. We need different lofts. We need different distance. And we look at the shot that's ahead of us, and we pick the right club. And yet in trading, we just think we're going to walk around the course with a 7-iron in our hand, right? And that's why I'm making if there's anything you're going to do into 2022, let that be something that influences what you do. Look, I've taught classes on this consistently. John's even taught market trends. There's a reason that 30 plus year trading veterans like John and I are still talking about, have taught trading wisdom that's over a century old. It still works. It still works. So I can't emphasize enough. This is at the top of the range. Could it go higher? Absolutely. But how much is left in the tank here? Does that make sense? Thank you for the question, 1K. And if there's anything that, I hope that you all are able to take away from our time here together, it's just some of these older trading wisdoms that still apply today. I don't care about algos, systems, pit traders. I've traded through all the Skynets, right? Many of you remember there's always an enemy out there. I don't give a rip about any of that. It's that Dow stuff that still works, Beautiful uptrend on that one, Mark. Beautiful uptrend. Buy the dip. Buy the dip. You had a nice double red. Look at that. You had a nice double red 3-8 exponential. Worked out pretty well. But, if we can get down to the 13 or even better, the 21, and it doesn't have to be by the end of the year, I think you'd be in really good shape with a long position. Beautiful double green. AMD was double green, went into chop. It's still choppy. Be careful. But one thing you could do is pull that 50, take advantage of it. 143.80 in that area, Kevin, that could be pretty interesting for us. Do I think the S&P is going to keep climbing? Look, one thing happened today that got my attention. Second 3x8 simpler propulsion dot. That is mildly bullish. So what I'd say is this. I don't want to get long S&P, but I do want to look at the stronger components within it and ask myself, are there opportunities to get long in X? I'd rather be a little bit more specific to a sector or and the sector rather than the index. I'll buy dips on healthcare. I'll buy dips in the XLK tech. The S&P, though, again, it's the one that's actually taken out a high. And so there could be some higher highs. I think 4,800 being a major psychological level, that's really it, could have a lot of gravitational pull to it. And then what gravitational pull works in both directions, right? Things can't get too far above it. Things can't get too, and they're going to be attracted to it. So I think there's probably going to be some gravitational pull at 4,800, but I'm not looking for a whole heck of a lot more, because as much as we might see ourselves pull to that number, that major psychological number, it'll also act the other way, keep it from leaving it too far. So north, right? But we do have this little 3.8, which could be interesting. But we've seen the 3.8 dot before, and it didn't do much. So please don't think just because the 3 and the 8 have crossed that this is now a nice momentum push. I think we're pretty much done. 4,800 and then some gravitational pull. I see some questions about Disney. Next year, 1, 2, 3 is in play. I will say Disney has a nice 1, 2, 3 in play. It's just taken a little bit longer than I would have liked it to, but Disney will definitely be something come early next year that'll be on my radar. McDonald's, beautiful. Great trade on that one. Jeff, just keep buying those dips. We got really close to a 21 last time. Just keep focusing on those dips. And then just to wrap up here, am I referring to the double green candles or the dots? Sure. No, when I talk about quote unquote double green, it's down in here, green over green. These are green grab candles, and I'll call them as such, green grab, GRAB. But double green or green over green, I'm definitely referring to the indicator known as the JT multi sitting at the bottom of my screen that measures the 8, 13, 21, and 34 EMAs. Thank you as always for the awesome questions. As always, thanks for being a part of Charts and Coffee. Thanks for being a part of Charts and Coffee all through 2021. We're not only going to continue on with Charts and Coffee in 2022, but we're going to be expanding it to a podcast format, bring on folks to interview. So again, thanks for being part. The original crew of the Caffeinate and Dominate team. All right. Be good to each other. I'll talk with you soon.